briefly touching $60,000 overnight, Sarah. Its worst trading day since the collapse of FTX in 2022. And even with that bounce you're seeing this morning, the street isn't ready to call this a turn. Jefferies put it bluntly. There are a few bullish indicators that we're approaching a bottom, and you've got trading desks really chalking this up to a positioning washout, with Bitcoin getting pulled into a broader risk reset. The mechanics here were brutal. Nearly $2.5 billion in liquidations in the last 24 hours, thin overnight liquidity, and forced selling that then fed on itself. Bank of America called the Thursday unwind one of the most severe hedge fund degrossing days of the past decade, a momentum flush that pulls Bitcoin down when funds are cutting exposure across the board. And JP Morgan warning that after a move like that, you tend to see more volatility and additional de-risking in the days that follow, even if you get a short-term rebound, which is what we're seeing this morning. The bigger issue now is the institutional bid. It is thinned out, and without that steady support, price gets pushed around by flows. You can see it in the spot Bitcoin ETFs. At 60K, which is where we were overnight, buyers were 41% underwater and needed a 50% rally to even break even, which then raises the bar for dip buying. And then you've got Strategy, which is our cleanest Bitcoin proxy in the public market. Stock was down 17% yesterday, just posted a nearly $43 per share quarterly loss tied to an unrealized loss on its Bitcoin stake. And yet it's up more than 20% today simply because Bitcoin is bouncing back. And that's really getting at what's driving digital assets right now, a market that's moving on reflexive correlations and thin liquidity, not conviction buying.